Good morning, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. There is new panic about MSTR. How totally, utterly surprising. I am just absolutely, thoroughly shocked. Just kidding. But before we get into the panic today, I need to explain MSCI so everyone is on the same page, okay? MSCI is a global index and analytics company. MSCI builds the benchmarks that trillions of dollars track. So if Vanguard or BlackRock, they run a fund that is labeled MSCI USA or MSCI World, that fund literally buys whatever MSCI decides that is in that index. MSCI does not run the funds, they just define the rules that funds follow. They essentially write the rules for a huge chunk of passive investing, and because passive money is absolutely massive, those rules do matter. But MSCI is not a regulator, they're not a government agency, and they are not the Wizard of Oz. They run models and methodologies, they listen to feedback, they adjust rules very slowly, and they operate on long timelines, and that is the reality. So with that context, let's now talk about this fun panic. MSCI did not announce the end of strategy. That did not happen, regardless of what some people on Twitter are saying. They didn't even announce a decision. What they did is they opened a consultation, a request for feedback, basically a corporate comments box. But because this is the internet and Michael Saylor is building a parallel monetary system that is competing with the banks, JP Morgan seems to have an issue with that. So now people are reading consultation and are starting to scream about forced selling, emergency liquidations, and armies of index robots preparing to torch billions of dollars. But none of this exists in reality. The MSCI timeline makes the fear even more ridiculous. They are collecting feedback until the end of 2025, and if they decide on any changes, those changes will take effect in the February 2026 index review, which is a lot of slow administrative work, and online it's being treated like it's a countdown to some financial extinction event. But this is what happens when people need something dramatic to justify a red candle. They look at an open consultation and treat it like some binding verdict. Meanwhile, the firms that actually matter in the discussion are the same asset managers who literally hold massive positions in MSTR. They're not going to endorse rules that damage their own portfolios without pushing back. So let's be clear, MSCI, they literally started a process. The panic is coming from social media because JP Morgan decided to trudge up this story from weeks ago. But once you understand what MSCI actually does, the whole drama looks like exactly what it is, a loud reaction to something that was never meant to be dramatic in the first place. So I am now going to myth bust 6 different FUD claims, but first I want to thank Horizon for sponsoring this video. During this dip, did you know that you can literally take the trapped home equity in your home? You can take that equity and buy Bitcoin, and Horizon makes it extremely easy, and they help you every step of the way. And there's no debt that you take on, and there's no monthly payments, and there's no term limits. There's no forced liquidation. You literally just agree to buy Bitcoin with some of your home's future value. It's extremely easy. They'll help you out. Check them out. Horizon, they have a link in the description below, and I'll talk more about them at the end of the video. Now let's get into the first round of panic posting, okay? Apparently strategy is getting delisted from the NASDAQ, and people are saying this with complete confidence like they've memorized the exchange rule book, but spoiler alerts, they have not, and this claim is the financial equivalent of someone diagnosing themselves with a terminal disease because they sneezed twice. Here's the reality. Delisting on the NASDAQ has very strict triggers. NASDAQ forces companies off the exchange when their share price stays under $1, when they fail to file reports, etc., when they commit fraud, when they collapse as businesses, but strategy is still trading in the hundreds of dollars range. The company has a functioning software business, billions upon billions of dollars in assets, and full compliance. You are more likely to see a Fortune 500 company delisted because of a keyboard error than because of some situation like this. Index inclusion has nothing to do with listing status, okay? Nothing. MSCI could remove MSTR tomorrow and it would still be listed on the NASDAQ with zero operational impact. The idea that a consultation at MSCI somehow triggers some NASDAQ eviction is the purest demonstration of how many people mix up completely different parts of the financial system. It's like watching someone confuse a restaurant menu with building code. And the people spreading this one, maybe they're not malicious, if I'm being generous, but They are simply repeating words that they saw in some other angry thread. They hear index removal and they assume delisting because everything sounds dramatic when you don't know what it means. But there is no delisting risk here. None. Zero. MSTR is not some distressed penny stock, okay? It is one of the most heavily traded names on the NASDAQ and a core holding for many different global institutions, so this FUD should not survive 5 seconds under scrutiny. All right, time for the second wave of panic. This is the claim that MSCI already made a final decision and billions of dollars of MSTR will be dumped instantly on some dramatic deadline. People are talking about January 15th like it's some scheduled asteroid impact. It's not. It's a date on a calendar when MSCI announces the results of a consultation. Nothing magical happens at 4 p.m. on that day. There is no some trap door. This is the actual situation. They're collecting feedback until December 31st, 2025. They will review that feedback, they'll debate internally, and then they will publish their decision on January 15th, 2026. And after that, if they choose to implement changes, the earliest that anything potentially happens is in February 2026, which is a long, predictable, transparent process. There is no scenario where the index funds wake up one morning and press some big red sell button because someone at MSCI had a bad dream. So the numbers being thrown around online are also misunderstood. JP Morgan ran some scenario analysis showing $2.8 billion of passive outflows that might occur if MSCI removes MSTR, and they also simulated a worst case where the other index providers copy the change, which the number gets near to $11 billion. But those are scenarios, they're not guarantees. They are the worst case scenario, and you have to remember that analysts model these things because it's literally their job, not because those outcomes are some pre-written destiny. But of course, JP Morgan decides to take this week's old story, and the internet now takes that story and starts rewriting it as prophecy. Suddenly, a consultation becomes a countdown, a research note becomes a warning sign, and people who have never read an index methodology paper in their entire lives speak with this absolute certainty about forced selling events that they have invented in their heads. The truth is a lot more simple. MSCI has not decided anything. The timeline is slow, the process is public, and the only people insisting that this is already done are the ones who need engagement before they need accuracy. Now we get to the doom scenario where people insist that if MSTR is excluded from MSCI indexes, the stock will just magically trade at a permanent discount and the entire reflexivity engine is dead forever. According to this group of people on Twitter, this is when strategy becomes a lifeless shell the moments that passive funds take some step back that is totally hypothetical. This is the kind of theory that people come up with when they look at one lever in a complex system and assume that it's the only lever that ever exists. But here's the problem with that logic. Strategy is not some closed-end fund with fixed shares and no operating business. It's a functioning software company with $460 million of annual revenue. They've had 5 different IPOs this year, raising billions upon billions of dollars. That is not the profile of a company whose entire business model collapses because one type of investor changes how they allocate. And I've made this point a lot of the time, and I don't want to get into it too much, but this MNAV premium compression that we have watched recently is not proof of permanent damage because it is sentiment, because the valuation of the company is in the numerator of MNAV. Sentiment is terrible right now in the Bitcoin community at large. Look at the fear and greed index for the entire market itself. It's like at near lows. The market does this every single time a complicated situation gets simplified into these hysterical headlines. The premium is around 1.1x the Bitcoin NAV right now because a lot of people are front running each other on worst case assumptions, which is not structural, it's just emotional. And remember, markets are irrational. So absolute worst case scenario, which would be the MSCI ends up excluding MSTR, which to me wouldn't make sense because people have incentives, human incentives. There are large funds that hold MSTR that are going to be giving MSCI feedback, and especially maybe some feedback after, hey, MSTR has been the best performing equity over the last 4 years. But even if it does end up excluding MSTR, well, that means the reflexivity loop just changes shape, but it doesn't vanish in perpetuity. Equity may become a more expensive capital source, but remember the debt, the preferreds, the subsidiaries, they remain totally wide open. That means that common equity may be a more expensive capital source for the moment, but remember, there's debt, there's preferreds, there are potential subsidiaries. Who knows? The world is your oyster when you own the most amount of Bitcoin. Even after Bitcoin dropping more than 30%, strategy has like 75 years of dividends on their balance sheet. As long as demand exists for leveraged Bitcoin exposure, there will be active buyers absorbing whatever passive money sells. Market structure always adapts, companies adapt, and the idea that one index provider has the power to permanently lock MSTR into a discount is not analysis. It is defeatism that is just dressed up as insight. Next up is this idea that passive outflows automatically translate into Bitcoin being dumped by strategy. This is one of the most confused claims in the entire conversation. People are treating MSTR like it's some redeemable ETF where investors can swap their shares for Bitcoin, but that is not how this company works. There is no redemption mechanism, and there is no scenario where index flows force MSTR to liquidate its Bitcoin positions. Here is what actually happens. If MSCI removes MSTR from an index, passive funds that track that index will eventually rotate out of the stock. That selling happens over days or weeks because transition managers are hired to minimize tracking error. It is mechanical, it's scheduled, and dull. It does not trigger a Bitcoin liquidation event because MSTR does not sell Bitcoin to satisfy index flows. That does not happen. The only thing that moves is just ownership of the shares. Passive holders exit and then more active buyers step in. It is a shift of who owns the stock, not a liquidation of corporate assets. The panic narrative, it does go further. I see a lot of people insisting that this will crash Bitcoin itself. This argument just ignores the scale of Bitcoin's market structure. They ignore the fact that spot ETFs are already carrying the absolute bulk of passive demand. Institutional flows are concentrated in the ETF complex, not some single corporate holder like MSTR. So pretending that MSCI's decision rewires the entire Bitcoin bull market is the kind of thinking that you get from people who consume financial news exclusively through viral screenshots. There is risk here, but it's not the fantasy version being promoted online. The real risk is temporary volatility in MSTR share price as passive funds rebalance. That is it. No Bitcoin fire sale, no multi-year crypto recession, no catastrophic liquidity event. It is a predictable mechanical process that the internet is trying to inflate into some global crisis because they do not understand how corporate treasuries or index funds actually work. And now we get to the apocalyptic claim that MSCI's consultation destroys the entire idea of corporate Bitcoin treasury companies. According to this argument, one policy review shuts down an entire category of corporate strategy. That is not serious analysis. This is again panic dressed up as expertise. The MSCI consultation, it is targeting a category and not a company. They are reviewing classification for digital asset treasury companies that hold more than 50% of their assets in Bitcoin or crypto. And this is where we start to play the fun definition game. Is it really just a digital asset treasury company if they have an operating business making millions of dollars a year? That's why this is a structural review, not some crackdown. In fact, MSCI froze multiple companies from index updates to avoid inconsistent treatment while they gather input. That alone proves that this is a methodology question and not some punishment. If the rule changes, companies will adjust. The panic crowd also claims that this kills the ability for companies to adopt Bitcoin at scale. This ignores the fact that most corporate adoption will come through financial structures anyway, not raw balance sheet holdings. And strategy is already moving in that direction. They have issued multiple classes of Bitcoin-backed securities, raised billions of dollars, and have proven that the strategy works whether the balance sheet holds 90% Bitcoin or 50% Bitcoin. So no, corporate Bitcoin treasuries are not going to die. They are just going to become more sophisticated. The only people who believe that this one consultation is the end of some Bitcoin movement are the ones who need drama because the chart just went down. And this is my favorite because this really is the crux of the issue in my humble opinion, because this is a game of human incentives and corporations are made up of humans. So this is the claim that Vanguard, BlackRock, and State Street are about to dump their MSTR with zero pushback because the index rules say so. And this is the part where the people pretend that the world is just run by emotionless robots with no financial incentives at all. So at best, this is a convenient story for panic posting. It does not match any of how these firms actually operate. Here's the actual incentive structure. structure, okay? These firms are some of the largest shareholders of MSTR. They have billions of dollars tied to MSTR's performance across their active and their passive products. They are also some of the largest clients and partners of MSCI. They work with MSCI on benchmarking, on analytics, index licensing, portfolio risk models, ETF construction. They're not going to sit quietly when a methodology change could wipe out value in their own books. So here's the important distinction here, okay? If MSCI eventually decides to exclude MSTR from certain indexes, the index tracking funds will sell because that is how tracking works. But the creation of those index rules is not some robotic process. It is a human process. It involves feedback from the holders of MSTR. Think it's going to be an internal debate with actual economic incentives, not some fairy tale FUD panic nonsense. The consultation exists precisely because MSCI wants input from institutions before setting new classification rules. This is why the largest asset managers will participate. They do not enjoy losing money for sport. People online like to imagine some world where the same institutions that profit from MSTR's volatility and long-term Bitcoin exposure decide to tank their own holdings just to prove a point. That is not realistic. They want consistency, not chaos. They want clarity, not self-inflicted losses. They want index rules that reflect the actual structure of the modern markets, not viral panic threads. So yes, index trackers will follow the rules once they are written, but the rules are written by humans who care about their own financial outcomes, and those humans own MSTR. Pretending otherwise is not skepticism, it is just inexperience. So anyway, this FUD is just total ridiculous nonsense. Remember, the major shareholders of MSTR are the ones giving the feedback. In my humble opinion, this is a totally coordinated hit job by the banks, probably because they just saw Michael Saylor raise over $130 million in Stretch shares last week. And they're realizing, why would anybody give us their money for a way lesser return? Saylor's competing with them and they know that, so they're just going to spread this nonsense. There's nothing they can do. Bitcoin is inevitable, and even if there are little things they can do, there's nothing that can stop the network. Even in the worst case scenario, Bitcoin still wins in the long term. So guess what? If we have to wait a little bit longer in the tail end, terrible worst case scenario, well, I'll just wait a little bit longer. But in my humble opinion, the worst case scenario just really isn't the reality of what's going to happen. Anyway, that's the situation. According to how I read it, what do you guys think? Leave a comment below. My name is Adam Livingston. I am the Bitcoin Wizard. Like this video, subscribe to the channel. I bring the energy, bringing the orange gospel to the masses every single day with more energy than anybody. Have a terrific day. Do not party too hard. Remember, kids, do not get scared out there. Now's the time to be buying. But this is not financial advice. This is financial entertainment. Class dismissed. Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.